Hi, and welcome to our first asynchronous discussion dealing with job order costing. Now, this topic of job order costing, we're going to spend 2 weeks looking at it. This week, we're going to get into job order costing, specifically how do we calculate the unit product cost. And then next week, we're going to look at obviously job order costing again, but specifically we're going to see how costs flow through the accounting system. So as we focus in on job order costing and specifically calculating that unit product cost, we need to realize that managers need to assign costs to products to facilitate internal decision making as well as to facilitate external financial reporting. So in this chapter, we're going to look at an absorption costing approach to calculating that unit product cost, which is known as, job order costing. So let's think about what we learned last week and what we're going to take from last week and how we're going to apply it, obviously this week. So last week we discussed and learned all of the cost classifications, right? We have indirect cost, we have direct costs, we have manufacturing costs, we have non-manufacturing costs. So specifically, since management needs to assign costs to products, we're going to be focusing in on how our costs behave, meaning we're going to be looking at both direct and indirect costs. And we're also going to be looking at manufacturing costs, right? So just as a quick review, if you remember, direct costs are easily and conveniently traced to a unit of product. Indirect costs are not easily and conveniently traced to a unit of a product. And then we have our manufacturing costs, right, which are direct material, direct labor, and manufacturing overhead. And if you remember from last week, we said that out of all the three manufacturing costs that we have, direct material, direct labor, and manufacturing overhead, two of those are considered direct costs, specifically direct material and direct labor, because we can easily and conveniently trace those costs to a specific unit of a product. Now, our indirect costs are those manufacturing overhead costs. Those are costs that we cannot easily and conveniently trace to a specific unit. So, since we have this conundrum, right? We have all these costs and we need to trace these costs to a unit of production, okay? But who uses job order costing? Well, a firm needs to have three characteristics in order to properly use job order costing. First, the firm has to make a number of different products each accounting cycle. Second, the products are manufactured to order. And three, this unique nature of each job requires that management trace or allocate costs to each job, and we have to maintain records for each job. So as we go through this lesson, we're going to see, first of all, what costs do they allocate, and how do they trace or allocate those costs? So for an example of the types of companies that utilize job order costing, our publishers list Boeing, Bechtel International, and Walt Disney Studios. So let's think about Walt Disney Studios. I think we all know what Walt Disney does, right? They make movies, right? They produce movies. Each movie that Walt Disney produces is its own job, okay? So that means Walt Disney Incorporated needs to trace both direct material, direct labor, and manufacturing overhead costs to each movie, okay? So think about it. Walt Disney makes a number of different movies, right? There's a lot of animated movies, right? Little Mermaid, Aladdin, Lion King, right? But then Walt Disney Studios also makes real movies, right? Meaning not animated. Think of The Lion King, right? The newest Lion King that came out. They used a lot of technology, and I believe they might even had real animals in there, right? So the point is, the costs incurred to make an animated movie are going to be a lot different than the costs incurred to make, well, a real life movie. Okay, so that's what we're going to look at. We're going to see, how does Walt Disney keep track of all these costs for all these different jobs. Okay, so the first cost flow we need to look at are direct costs, direct material and direct labor. Okay, each job, and in this example we have 3. Okay, so let's say, excuse me, pick any 3 movies that you can think of from Walt Disney. I'm going to think of, let's see here, the old Aladdin, the old Cinderella, and March of the Penguins. All right, so they got to make each of these 3 movies, right? Well, each of these 3 movies are going to require different direct material costs, and they're also going to require different direct labor costs. Okay, and we need to trace those to each of those movies. Second thing we have, or the second cost flow we need to worry about, are our indirect costs, our manufacturing overhead costs, which are all our indirect costs, all the indirect material, all the indirect labor costs. Walt Disney needs to allocate that manufacturing overhead to those 3 different jobs, or those 3 different movies. So how in the world does Walt Disney's accounting department keep track of all these costs? Well, they use a job cost sheet. So you can see in this example here, they give us an example of a job cost sheet. We have Pear Company job cost sheet. Pear Company must be the name of the company. They have a job number. So what had happened was, one of their suppliers called them and said, hey, I need X amount, we'll say 20 wooden cargo crates. But these wooden cargo crates need to be a specific dimension. Okay, so right off the bat, because this customer has a specific order, they need wooden cargo crates, but they need a specific dimension. Let's say, I don't know, 2 feet by 4 feet. Okay, another customer, however, might need wooden crates, but the other customer might want different specifications. Maybe they need a wooden crate so they can ship an electric generator, right? Electric generators can be huge, right? Or electric transformer. Those things can be huge. So in order to build a wooden crate for those electric generators, are going to be different than what this customer needs. So if you look at the job order cost sheet, it gives us all the information we need. We have the job number. It's A143, right? We have a department that's going to be producing this job. And we have the item that they need. They need the wooden cargo crates. So we're going to trace all the direct materials, all the direct labors, and we're going to allocate the manufacturing overhead that this job incurs. So where do we get our direct material costs from? Well, the first thing that the production manager needs to do is to fill out a materials requisition form, right? And basically, this is just an internal document that the production manager sends over to the supplies department and says, hey, I need some material because I'm going to make wooden cargo crates. Fine. What do you need? Well, we can tell by the materials requisition form that this person or this manager needs 12 2x4 boards, and they also need 20 1x6 boards. Notice in the materials requisition form, not only do we have the quantity, but we have the unit cost of each of those boards, and we can calculate out the total cost. So we can see that we needed 12 2x4s. Well, those 2x4 boards cost us to make or to purchase $3. The 1x6 board, we need 20 of those. Well, it costs us $4 for a 1x6 board. So we could see that this job is incurring $116 worth of materials. So from the direct materials requisition form, we go to the job cost sheet and we just transpose the information from the material requisition form into the job cost sheet. So notice that the requisition number from the form is placed onto the job order cost sheet, and we put the total amount of direct material, which in this case is $116. The next thing that we need to allocate is obviously direct labor, right? So how do we allocate direct labor? Meaning, where do we get our information from? Well, we use time cards. So you can see here on the slide, we have a Paraco employee time ticket, right? This employee, apparently his name or her name is I Am Skilled, and they are number 36, okay? So on this time card, we see the total hours that this employee worked on this job. We see their hourly rate. And if we multiply number of hours worked times hourly rate, we get the total amount that we have to pay this employee to make their to make these products. Now, the final column on the job cost sheet has our job number. So basically, what this employee is telling us is that they worked 8 hours on job number A-143. Okay, and this person makes $15 an hour. So we incurred a cost of $120 with direct labor to make these wooden cargo crates. So once we get the time ticket, we use that and we can fill out our job cost sheet. So the ticket number is 36, meaning employee number 36 worked 8 hours on this specific job, and the total amount of direct labor costs that we incurred is $120. Now, we did not cover overhead costs. How do we calculate that predetermined overhead rate? Okay, what even is a predetermined overhead rate, right? We didn't get there yet. The takeaway is really how do managers implement a job order costing system? Well, they need a number of tools, and they have to understand how costs behave, right? So remember, we have our direct costs. We need to trace them to each job. Same thing with direct labor. We need to trace those to each job. We either use a materials requisition form to get our direct material cost. We're going to do the same thing with our direct labor costs. We're going to utilize the employee time ticket and see how much time they worked on a specific job, and we're going to allocate those costs to each of those jobs. Okay? We didn't get to manufacturing overhead yet, right? We're going to do that in our next video. So we'll see how to calculate and allocate the manufacturing overhead, but just know that that manufacturing overhead has to be allocated to each of the jobs. And obviously, the job cost sheet helps us do all this. So when we come back in our next video, we're going to look at how do we compute a predetermined overhead rate. So please tune back in for that one.